Well, the sky may not be falling, but is the ceiling cracking?
Beginning of good things.
Good Tuesday morning to you. My name's Jason Graneman. I'm your lone slayer for the day. And yes, it is bulletproof. In the economic market weather report, we are experiencing rain showers in the equities. That's right, the Dow overnight. When I woke up, possibly when you woke up, before the market opened, was already down about 250, 60 points. What does that mean? Well, all the gains it had yesterday, gone overnight. When you woke up, everything wiped out. Now, even more to come. It was down 500 points, and you're probably getting news releases showing the 500 points down. Well, at the time I made this video, it's now 600 points down. We'll see where it goes today. Not a lot of confidence. Confidence is key when you want your equities to move upward, and we're not getting much confidence at this very moment. Now, in the Treasury side of things looked pretty good for mortgage rates, but wait, there's more. The 10-year is down below that 1.5 mark, 1.47 at the time I looked at it before this video. However, having said that, the Fed is speaking today. Powell is speaking with Janet Yellen and a few others, and he mentioned that the Fed wants to speed up the retreat of the money that they're investing in bonds. What does that mean? Well, it means that by next summer, the Fed had planned to roll back about $5 billion a month until they were finished investing in the bond market. That helps mortgage rates. However, as soon as Mr. Powell mentioned that they want to speed up that retreat, in other words, make it end quicker, our mortgage market reacted to that. And the gains that we saw this morning, the improved interest rates, well, Wall Street just took all that right back. So rates are sitting right about where they closed yesterday at this very moment because of a midday rate change as soon as the Fed mentioned that. So that's how quickly news and narratives and things can impact the market. Remember, fragile. I think the market is a bit fragile right now, and this is another sign of fragile means in the market. In other words, just one sentence from Mr. Powell can change your mortgage rate. So we'll see as the market now tries to settle down. If the equities continue to retreat, then we'll probably see some improved mortgage rates as that occurs. Remember, a lot of this is surrounding itself by the confidence that the Omicron, I think I got it right, is placing in the marketplace. Anyway, confidence has a lot to do with the equities. If the equities are growing, that's fueled by a lot of confidence in the market. When the equities retreat, that's lack of confidence in the marketplace. So it's very important to watch what's going on with policies and changes surrounding the COVID proceedings and environmental impacts that could have on our equities market. If the equities, again, continue to retreat or roll back, then we may see some better mortgage rates. However, it's not something that's always in equilibrium. I am known for saying that 2 plus 2 doesn't always equal 4. Check out my video on is fish a number. 2 plus 2 doesn't always equal 4, and so it's not always going to make sense. So predictability isn't something that you can rely on. That's why I don't predict things on this channel. However, anticipation would mean that if the stock market does continue to roll back, I would anticipate some better mortgage rates in the future. But there are many, many factors that go in to how your mortgage rates are determined. We're just speaking about sort of the larger, more obvious components of what influences mortgage rates. So if you have a great rate on the table, it's not a bad thing to take a great rate if you're in the middle of financing a home. However, keep your eye on global events, news, the narratives, things that are surrounding the Omicron information, and that will help you at least be able to anticipate where things are going. And then keep your eye on the 10-year Treasury. That's the most simplistic way to monitor the trajectory of mortgage rates. Remember, 2 plus 2 doesn't always equal 4. It might eventually, but we're talking about Wall Street here. 2 plus 2 sometimes won't equal 4. Now, some other indicators, things to watch. Oil's down to $67 a barrel. Now, it crept up over the last few days, but it breached $70 a barrel. It's back down to 67. Good for your wallet when you're spending money at the pump, but that's also another worldly indicator, something you can watch. And where oil goes, remember, we saw this. Let's not lose our short-term memory. We saw this in 2020 when the price of oil came way down. Well, during what time did the price of oil come down? Well, during the pandemic. When the pandemic was rolling out and the markets were retreating, oil retreated. There were a lot of reserves on hand, so overabundance. And if less people are using gas or oil products, which oil goes into a lot of things, a lot of products, plastic, then the price of oil could also come down, which would be anti-inflationary. So we'll see where we go. We are still in an inflationary economy. The dollar is still hanging in there. It's strong, still at that 96.3 when I looked at it this morning. So that's a strong dollar at the moment. Strengthening or weakening, that's something to keep an eye on as well. But might be time to buckle your chin straps. And I will see you on the next one. Thank you for watching. My name's Jason Graneman, your Loan Slayer for the day. And remember, it's not work, it's lifestyle. Cheers. The 10-year Treasury is like sunny and windy at the same time.